Afternoon, how are we all doing? Afternoon, Dereji. Still can't remember how it's pronounced. Afternoon, Danny. Afternoon, Baggy. Evans, Colonel. Which session is better to trade our reversal strategy? What reversal strategy? No session. It's just if you're talking about H1M5 or H4M15, it's anytime you get a signal. When it happens, doesn't really matter. Morning, Stefan. Afternoon, even. Burke, Monkey. Virginia, Brian. Afternoon, Stevie. Just looking at the Euro US dollar, Brian. Bit of a weird one today, eh? Certainly didn't work today, did it? The strat. Oops. Bits and pieces. So yeah, that was the 4-hour range today from Asia. Break to the downside. Probably stopped out break even. Broke to the upside. Difficult one today, isn't it? So we just had a big drop on the indices. The news has just come out for the US GDP and unemployment, both positive. So unemployment claims are down, which means unemployment rate is likely down. GDP is up by quite a margin. So we were looking at a 1.4 on the quarter. We actually got a 2. So economy picking up, unemployment dropping, all going in the right direction in the US. So that's all bullish US. So obviously we've had a big drop on everything against the US dollar. US dollar has rallied, indices have dropped, which is the usual thing that happens. Yeah, big moves there. US dollar yen rallying, still not hit that 145 level yet. Let me just change that to 145 so it's accurate. So not quite there yet on that, but yeah, big moves on the US dollar positive. The euro today. So the other news that we had today was the preliminary CPI figures for Germany, which is basically the European CPI. Pretty much as expected. They're expecting a 0.2. We got a 0.3, so pretty close. Spanish was up by a 0.2, so all kind of as expected for the Eurozone. So didn't get a massive amount of movement off of that. News is all done for the day. We got pending home sales at 3 o'clock, which doesn't really do anything. So US indices, obviously, we've had a very big move pre-market. So whenever we get this kind of very large pre-market movement off of news, quite often the market has done a lot of its movement and a lot of the volume in the stock market before we get to the opening bell. So they quite often don't get a big reaction. The move's kind of done for the day. So we'll see what happens. We were trying to rally straight up into yesterday's areas, and obviously then the news kicked it back down again. So we'll find out what happens at the open, obviously, 4 minutes or 3 minutes. But yeah, so that's basically what's happened this morning. Other news, 2 rate hikes again, same thing as usual. This is all the claims and the CPI. Apart from that, there's no other news this morning. So everything else this morning was exactly as we looked at this morning in the morning session, but it was a crappy session, literally sideways, totally sideways, until the news came out, and now it's all gone mental as usual. Got one hour on the buy side. Brian, cool, very good. Henrik, afternoon. Eltro, evening. How's life treating me? Not too bad. Hot. We actually had rain today. Water fell out the sky this morning. Weird. Completely forgot rain happens. So all the euros are starting to come down. We have had obviously fairly bullish news on the euro, but market doesn't seem to have decided that that was bullish enough. So No real moves there at all. As you can see, all US indices down at the open or just before the open. So we'll see where we go with these. We've got 2 minutes left. Other than that, not a lot of massive movement yesterday. We're kind of just retracing a little bit back of what we did yesterday on the Aussie dollars, but not really going anywhere. The yen pairs are kind of having a bit of weakness, but nothing dramatic. So yeah, it's just a dull day. Look, euro yen kind of sums up the day. Not going anywhere at the moment. And any movement that we have had has basically been US dollar related, and it is still rallying. So ADRs today, the only ADR we've got is euro US dollar. So if you want to take that as a long, you're not going to get it because it's all the way up there. So if we make a new low, your reversal alert is going to jump back down to there. So that'll give you an opportunity to get in tight. But other than that, nothing to look at today. It's crap. Load of rubbish. So we'll see what happens at the open. Did 150 on the opening range with a trailer at 50. Got stopped out on the way down with a small win. Euro US dollar. Cool. Very good. Stopped out in the DAX both sides. Yeah, I got stopped out in the DAX both sides today. Just whipsawed the whole sesh. Wash out this morning, the DAX. Have I ever thought about setting up a Discord server? I've got Telegram, so I don't really need Discord. They're all the same, aren't they? Telegram, Discord, all same stuff. It's somewhere to talk. I can set up different channels in Discord, but no one talks in Telegram. So what's the point? There's no point in moving myself over to another channel where no one talks. It's mainly a support thing. I'm not a signal service, so I don't do anything like that. Right. Market is open. So your pre-market on the NASDAQ, fairly tight range. The Dow is a short. S&P pre-market range. Thinking about going short, but it hasn't yet. So we see where we go with these opens. Very difficult to tell any direction after a move like that. So we'll see where they want to go. They may well want to just continue to rally the direction that we've been going before the market opened. They may want to put it all back. So just wait and see. It's probably better not to take the pre-markets today. Just wait for that 5-minute range to go in and take a break of the 5-minute range, because probably better to let the market kind of establish itself. It's going to be quite difficult to call a direction on this today. If we look at the Dow and potentially where we're going, as you can see, we're not really going anywhere directional wise on the Dow at the moment. So this morning we kind of had a rally up on the highs. That propulsion gap rejected. So rally down into yesterday's low, which will be ADR. If we get down to there, that's probably a good buy. But other than that, no direction at the moment. Outros in pre-market. So S&P trying to trigger short. Can't get it on though. There we go. Short on the S&P now. Should be. For some reason, the broker is not executing the order, but hello. There we go. Just slip me down a little bit. There you go. So the Dow is rejecting the lows at the minute. Bit whippy. So pre-market on the NASDAQ has gone long and short. So depending on where you put stops, you are short on that, short on the S&P, short on the Dow. So everything is a short basically on the pre-markets if you're taking those. Everything's frozen. Okay. Back to life. US dollar looks like it's still rallying at the moment. Euro US dollar still coming down. So just sitting at ADR on that Euro US dollar at the minute. So just sitting at ADR on that Euro US dollar at the minute. Johannes, on the ADR mean reversion hedge files, you set up the files for a 100K account. Can you explain the profit again? You set up for the 100K account. Do you mean the so basically come on. Okay. So yeah, basically I don't know which set file you're talking about, but God, what is going on with this computer today? ADR. Not working. Nothing's working today for some reason. So profit target is set at $250, which is 0.25%. Yeah. So all I've done is close. So basically, it will close out when we get to 1/3 of an ADR, or $250, which is 0.25% on a 100K account. So if you're running this on a 10K account, you would set that to 25. If you want to go, I mean, this, you know, this, I mean, I say this all the time. There is no right or wrong. You target where you want to target. That is 0.25%. Seems like a good thing for a scalp. If you're going to scalp, 0.25% of your account on a scalp is pretty good scalp. 1/3 of an ADR movement is a pretty good scalp. If you want to set that at 0.5%, set it at 0.5%, and then it will take you out at either 0.5% or 1/3 of an ADR, whichever comes first. So there's no right or wrong, but that monetary figure is a monetary figure. So obviously you would set that up related to your account size. So if you're using a 500K account, you would make that an awful lot bigger, 5 times bigger, wouldn't you? Is that the one you mean? I think that's probably the one you mean, isn't it? But if you don't want to use a monetary amount, get rid of it. And if you don't want to use a percentage of ADR, get rid of it. And then you can, as soon as you get into a trade, manually set your targets. So you don't have to use the targeting for baskets in the EA at all. The EA gets you into the trades, but it's entirely up to you how you get out of them. So, you know, for example, on this Euro CAD trade at the moment, there's no targets set. I have put a TP on that propulsion gap. So that's where I think the market is probably going to get to, which is a pretty safe bounce off of there or bounce off of there out of that propulsion gap. That's a pretty safe target. But you may want to set your target to go, I think we might come down and do a double bottom. You know, I have no idea. As you know, I have absolutely no clue where this is going. It's going down, hopefully. But where it's going to, anywhere. So set what you like. But if you want to get out automatically, if you set it at 0.25%, you'll just basically build up 0.25% every time you get a TP. Again, nothing's right, nothing's wrong. It's just whatever you deem good. You know, ADR reversals, I like them as a scalp. So an ADR reversal, for example, on this Euro US dollar today, we've hit ADR. If it bounces, I'm not, because normally when you hit an ADR, quite often it's hit ADR because the market wants to go in that direction, in this case to the downside. So what you're looking for is a bounce play and possibly a continuation. So your targets off of an ADR reversal shouldn't be too big because we're not looking for it to go all the way back up to there. Sometimes it will do a V-shaped recovery and go further. But most of the time what you'll find is if there's a big strong move in one direction which hits ADR, it'll then pull back and continue that direction. So what we're looking to do is grab some money on that pullback. If you go for too big a target, which is why I say somewhere between a quarter to a half of an ADR or a third to a half of an ADR. That's a 50% retracement. Right. That's why that ADR reversal set file is set up to 250, which is a quarter of a percent, because I'm not looking for a fortune. I'm just looking to make a quick buck on a scalp play. Dow's gone along. Let's quickly look at what the indices are doing. Shorts on the Dow stopped out, flip long. NASDAQ, no trade today on this version of the EA. So if you're taking the pre-market, obviously, you will now be long. Actually, no, you're double-ended stopped out on that. If you took pre-market, stopped out on the short on the S&P and flip long on the pre-market as well. Although the market seems to have completely frozen. I don't know what the hell is going on with my machine today. Something weird. I'm not sure this is a data problem. I think this is kind of everything is just freezing up for some reason. But anyway, so yeah, flip long. So your opening range on the NASDAQ is there. Big opening range today. So up to you if you want to take that one. It's much better on the Dow and the S&P, much smaller ranges. So these are probably the two which are the best ORBs today. As you can see, this one's about to hit pretty much TP if that propulsion gap doesn't hold up. So they are just undoing the entire move off of that US. So I'd imagine the US dollar has just started to drop. So a little bit of US dollar weakness. Maybe not. Difficult to tell, isn't it? But the indices is certainly pulling back. Ultra in pre-market, missed my break-even stop long, now taken out break-even short. Slippage on my Forex funds has been a lot worse lately. I noticed that yesterday on oil. So when I took this oil trade yesterday, got in on oil yesterday there, pending order there. And price got up to about there and I got spread in and then it pulled back. So I actually got spread into the trade way before price got anywhere near it. But I think, you know, you can't really blame my Forex funds for that because they are just mimicking market conditions. And it is a very illiquid market at the minute. We saw with the DAX this morning, the DAX was moving very robotic this morning because there was just no liquidity in the market. So if there's light liquidity, they have to spread to get the orders filled. So you do get that slippage, unfortunately, in light markets. And it is a bit light at the moment. So Euro US dollar, obviously that's the only ADR today. We looked at these this morning, these weekly ranges. The only new weekly range we've got is the New Zealand dollar, US dollar, and that has just happened there. So that's a weekly hit. So we're on Thursday, Wednesday, Tuesday, Monday. So there's your high. That is your weekly range extension. So we're just coming down into propulsion there. So it's not a great propulsion gap. ADR today is that low. So that is a beautiful spot for a long, failing that monthly low at 175 ADR. So we were looking at this one yesterday. This was nicely extended, as you can see, got into an initial position on this yesterday. Really nice extension on the RSI. Big, strong push down, no profit take move. All we've done today is going to an accumulation and it looks like we're putting a second leg in. So I'll be looking for a bounce either off of last week's low or the monthly low on that. There's not many RSIs to look at. Just quickly watch what's going on with these indices. Just curious to see if we get that high challenged, because obviously this is potentially a pullback move at the moment on the indices. So I'm interested to see if we are just going to put a V-shaped recovery in and run for the hills. Struggling at the highs here. They're selling back into it. NASDAQ's trying to come down as well. So if this NASDAQ closes on an inside bar, good looking short opportunity here. So bracket that range on that 5-minute candle. So if we get an inside bar here, If you take a break of that or that, that's likely the direction we're going to head in. If we close as an inside bar, we've got 2 minutes left on this candle yet, so don't bracket that yet, but that would be the best play on the NASDAQ. Struggling today, very volatile market. Market's all over the place today. Very difficult to read anything. Mumo, outro, could it be current market conditions, not on my Forex funds issue? Spread on Robo Forex and the DAX this morning was a bit weird. Yeah, as I just said, yeah. It's likely just the market at the moment. Afternoon, David, didn't see you there. What is the point of using a funded account, Burke, to get your hands on money? So basically, to make money in the markets, you need money. Because unless you've got a big account, you're not going to be able to trade within decent risk parameters. So funded accounts, obviously, means you can trade with a decent amount of cash, 100 grand, and it's not yours. So let me ask you this. If you had $5,000 to start trading with, yeah, and an average trader, decent, consistent trader, will return somewhere between 5 to 15% a month, right? Forget these people out there that say you can compound accounts and make 25% a month and all that crap. Doesn't happen. So you're going to make somewhere between 5 to 15% a month if you're trading with proper risk and you're consistent. If you've got a $5,000 account to trade with, and you're going to make, let's say, call it an average of 10% a month, you are going to make $500 a month. Can you live on $500 a month? Yeah. If the answer is yes, off you go. Brilliant. You can trade. If the answer is no, you need to get hold of some capital. So if you go out to a funded account, funded company, and try and get 100K in funding, and you make 10% a month, you're making 10K a month minus commission. So probably 7,500 because you get 75% of what you make. Can you live on 7.5 grand a month? Likely you can. So obviously there's 50K accounts, different sizes of accounts, but that's basically the why you need a funded account. If you haven't got money to trade with, you're going to find it very hard to make money. If you've got a 5,000 account and you need to make $2,000 a month, you've got to get a 50% return on that. Yeah. Warren Buffett doesn't return more than 8 to 12% a year. Why do you think you are better than the biggest, best traders in the world and you can return 50% of your account? Oh, so you need money. That's what funded accounts are for. However, all the funded companies are set up so that you've got tight trading constraints, which for the vast majority, they know are not going to be conditions that they're going to be able to sustain long term. So people blow their accounts because they're trying to over leverage. So there's two ways to trade, as you've probably heard me saying here before. You can either go out there with your $5,000, and the best thing you can do is buy 10 evaluations of 100K. They're $500 each. So that gives you access to $1 million of funding. You're going to blow a lot of them. Some of them you will pass. The ones that you pass, as soon as you pass them, drop your risk down by 1/3 to 2/3, and you might have a chance of holding that account for a few months to get paid, and you'll get all that money back very easily. But what people tend to do is they run with the risk they pass their evaluation with, which is too high, and they just blow the account. So statistically, somewhere in the region of, this is my Forex funds figures, it's, well, I can't remember exactly what the figure was. It's something like 0.7% of people will actually hold an account for 3 months. So let's say maybe 1 out of 200 or 300 people might hold an account to get through to payday. That's the statistics, because you are encouraged to gamble. You're encouraged to try and force the market to do stuff that the market doesn't want to do, and therefore you blow the accounts and you have to keep doing evaluations. But there are ways to make money with them. But you can't position trade with a funded account because you can't control drawdown, because the market controls your drawdown. So therefore, if you've got a drawdown limit set of 5%, you can't position trade, can you? Because you can. I mean, I've passed evaluations position trading, but it was luck more than judgment, because I was in the market at the right time, in the right conditions. All you can do, really. We are holding at the highs. We didn't get a inside bar on the NASDAQ. But the easiest way to make money out of prop is to take multiple props evaluations, and the ones that you pass, trade exactly the same way as you did when you were doing your evaluation, and hope you get a lucky run for a few days, which builds up 2 to 3K or 5K in my case is what I tend to aim for. And when you get there, stop and pull that money out. Pay yourself. What people tend to do is P&L goes like that, right? That's a typical P&L of a profitable trader. Yeah, every single one of those is a blown account. Yeah, it's more than 5% of drawdown or 10% of drawdown, because there is no system or strategy on the planet that doesn't have a drawdown period. They know that. So they set a limit for you to trade within that they know there isn't a system that exists that can do it for a long period of time. Every system can have a lucky run. I've had months in position trading where I've drawn down less than 5% on my account and returned more than 15% on my account. If those months happened every month, I'd be a multi-millionaire. They don't. I have months like I'm having this month where I'm sitting at minus 4.3%. And I have a losing month, and that's just what happens. So these are blown accounts. So if you start your funded account there, and that makes you 7K, stop trading it and pull it out, because the chances are by the time you get to payday and you carry on trading, you'll have a unlucky run, and that 7 grand will be gone. That will send you full tilt. You'll double your exposure trying to get it back, and you'll blow it. Or, as I said, reduce your risk right down so that you can't blow the account. What I would say, Burke, is first of all, before you ever take any prop firm evaluation, before you ever pay for a demo account with a prop firm, get a demo account. And if you can trade in a demo account with your broker under prop conditions, stay within 5% daily drawdown and 10% overall drawdown. Yeah. As soon as you can pass that twice in a row, i.e. hit an 8 to 10% target twice in a row without hitting the rules, then go and pay for an evaluation. Because until then, all you're doing is you're paying $500 for a demo account. They're free. Robo Forex, I've got about 50 of them. So do that first. That's my advice anyway. I think I'm going to bin the NASDAQ and start trading the Dow. Needs to do some testing on it first. Seems to move very similar to the DAX. Yeah. So the Dow and the DAX are very similar because they've got, well, now it's got 40, but 30 and 40 stocks. So it's a much more liquid instrument because there is only big stocks in there, yeah, which have slow movement. Therefore, they move a lot more orderly. The NASDAQ is an absolute beast. Everybody loves trading the NASDAQ in futures because you can press the button on the NASDAQ and it will just go, and all of a sudden you'll be sitting in $3,000 of profit, which is fantastic until you go, and then you lose $3,000. Whereas you don't get that on this. And the S&P is just a pain in the backside. Look at the ADR on the S&P 42. Look at the ADR on the NASDAQ, on the Dow, 293. They both move very similarly. You want to trade the one that moves the biggest distance in the most orderly fashion, which is these two guys here. This one will make you a lot of money very quickly, but as you can see, it will also do something like that, the open and kill you. Okay. And that's partly why I've been testing this new version of the EA. It identified that was too tight, and it identified that was too big. Historically, when I'm in my back testing, that range isn't conducive to a breakout. It hasn't broken out today. That range is often whipsawed. So it didn't take a trade on that at all today because statistically, not a good range to trade. However, the NASDAQ's pre-market was a good range to trade, and we are just about to hit TP on it, he says, as it backs away from his TP. Come on, don't do it just because I said TP. You mentioned the word take profit and it goes, whoa, I'm not giving you any money. I will force you to give me money in a minute if you don't give it to me. Yeah, I'm not having that. The bank. One of them. Okay, stop to break even on the second position. So just lock that in. Just in case. So many times. It just misses you and then off you go into painland. NASDAQ, good example of jittering candles versus spiking candles. Regarding my comment this morning about volume. Yeah, exactly. So that's what you find. You know, if you were in the live room this morning watching the DAX, if you're watching it at tick level this morning, you'd see it going like that. Yeah, the DAX, it was pushing and it was doing that sort of thing. The NASDAQ does that. Yeah. Because there's so much volume going through the NASDAQ. You've got 100 stocks in there, which are all highly traded. They're all big stocks. And you get an awful lot of volume going through it, which means that there's an awful lot of whipsawing on it, which is the problem. So there you go. Now it's going to hit my TP. Now I've taken TP $200 early, but I'd rather have TP $200 early than not have TP $200 early and have a break even on it. So watch that high on the Dow for sells. S&P is just stuck, as is obviously the NASDAQ at the moment. So no movement. This is really out of sync at the minute, Dow with the other indices. Right, let's look at some FX stuff. But guys, that makes sense. Don't have much money. I don't have that much money, but when you're in 12% drawdown, you lose that account and start over. Yeah, exactly. So that's why I said before you do go and look at. So if you go onto the website, all the top prop firms are on my website, and you can compare them. I'll put a link in there. You probably notice there anyway. But if you go and just look at these firms like my Forex funds, go and look at the rules that they set for the different account sizes. And basically trade a demo account first. So take a demo account, put 100 grand, whatever you're going to trade. So, you know, make it as you're going to do it. So if you've got $500 to spend on prop, go and get yourself a 100,000 demo and trade it as if you were trading with my Forex funds. Hit that target. Do not hit that daily starting drawdown. So wherever you start the day, you cannot lose 5 grand. You cannot lose a total of 12 grand on that account. And you have to hit an $8,000 target. And you've got to do that within 30 days. Yeah. So if you can achieve that and then do it again, but hit a 5% target, so hit a 5 grand target under the same conditions, then go and do this. And then go and pay them to do the same thing again. What you will find, though, is you'll have a down point at some time, and it'll go really wrong. So you've got to use small risk. Best thing to do on prop is, I find, is 0.25% to 0.5% risk. I risk at the moment 1/3% with 2 positions on the DAX. On the funded accounts, and yeah, it doesn't make a lot of money, but then again, $300 to $500 a day is still a decent amount of money. Yeah, after 10 days, you've got 3 grand. That's the mortgage done. You just got to set your expectations as to what you need to get out of it. Trading threshold is a bit to get used to on Apex. Defo got to keep your eye on R Trader to keep track. It's horrible, Brian. That's why I don't like it. That's the thing that always puts me off about futures. I've run a futures account up to $2,000 in profit, right? Pulled it back to $1,000 in profit, and they've cancelled the account because I've hit the trailing drawdown limit. Because I've ran it up to 2,000 and then only took 1,000, I drew down by 1,000. You failed. Horrible. Horrible. Do you agree, though, funding accounts play with too many rules? Yeah, they have rules, lots of rules. There's nothing you can do about it. No one care. Your comment, basically, they have got a lot of rules, yeah. But if they didn't have rules, everybody would pass with them, wouldn't they? Yeah, they're not looking for people that can't trade and are gambling. So they've got to have rules in place to try and encourage you to trade responsibly. Yes, there's more rules in there. I don't care about gaining to 15% of drawdown on my account. I live in drawdown. When I'm trading with a stop loss, I will have 5 or 6 trades that go against me, and that's fine. I'll lose X% of my account. It doesn't meet their rules, so I lose the account. That's basically it. Those are the conditions. But how else are you going to get hold of 100 grand? If you've got your own 100 grand to play with, don't go to a prop firm, for God's sake, obviously. Do what the hell you like with your 100 grand. If you've got 100 grand to play with, why are you trying to become a trader, is my question. Because most people who have got 100 grand to spare don't really need to make an income doing the hardest job on the planet, do they? Let's face it. Have a look at the yen pairs. Right, so the RSI, we've just got another RSI hit, ADR hit, Euro CAD. So Euro CAD, obviously the Canadian dollar will be rallying along with the US dollar. They are still pushing a little bit. The Aussie dollars at the moment, so we're not going anywhere today much, as you can see. So Aussie dollar yen, hardly any movement at all. We've just had a little bit of a pullback on yesterday's drop. Obviously ADR is all the way up there, so miles away on that. CAD yen, absolute sideways. CAD's going to rally a little bit now because obviously the US dollar's rallying. Swiss yen, sideways. We're just retesting the highs. Euro yen is completely sideways. Pound yen is completely sideways. New Zealand yen, sideways. It's not going anywhere, is it? There's the yens. They're not going anywhere. US dollar's obviously rallying because US dollar's just had news. But other than that, the yen today is having a rest. So we had that strength come through yesterday, but nothing so far today. The US dollar yen rallying like this is absolute godsend. It's brilliant. The more they do this, the more the Japanese are going to press that button. So as far as I'm concerned, 200 ADR today would be spectacular because tomorrow we'll wake up in an absolute bucket load of profit. But something tells me that's not going to happen. US dollar yen not stopping. No, that's still rallying. Got 2 positions on that at the moment. We'll be looking to get into a third up at, well, not there I went. That's too close. I know, yeah, I might do. It's a bit tight. I'd like it to push a little bit further. What I would love to see is that 145 big round number get hit because we'll get a decent reaction off of that. There'll be sellers looking to sell up at that level. So it would be good if we can rally to 145 and then get a decent move started off of there because we'll have sellers on side as well then. So RSIs today, we've got only a couple to look at. Euro odd is extended on the 4. Was extended, sorry. That's come off. So got a sell order on that. Looking to pull back into that high. So yeah, that's already played out. Your reverse alert on that. Kind of the entry was yesterday, but you've had reverse alerts on it today as well. So Euro odd already played out. Euro New Zealand. So that is extended as well on the 4. Got position on that. Again, same thing. Just going to come back into this area here. Previous resistance. So one of 2 things is happening here. That resistance is either going to act as support and we are going to rally, or this is a false breakout and we're just going to plummet straight back down into this range. One or the other. Either way, I should be out somewhere around there. US dollar CAD. So that's obviously rallying. That's extended on the 4 hour as well. Only just got extended, not massively extended at the minute. Difficult, this one. US dollar CAD, obviously, as you can see, US dollar's rallying hard. This thing isn't, because when the US dollar rallies, the CAD rallies. So this is telling me at the moment the Canadian dollar is actually stronger than the US dollar. So we've just had US dollar news, but Canadian dollar is pushing back pretty hard. So oil is probably rallying a little bit. Yeah, there we go. So big push on oil, helping the Canadian dollar along. So US dollar CAD pulling back. That is a 4 hour RSI extension. Very hard to read this US dollar, even with all that positive news. As I keep saying, the positive news we get on the US tends to have that kind of effect. Every piece of negative news we get tanks it. So we've had 2 positive news events back to back there. We had the unemployment claims coming out good, CPI coming out good, GDP coming out good. So it's all good news, but it's not massively good news, is it? They don't seem to want to rally into this US dollar at the moment. So got a long and a short on this, hedged at the moment. But that is a good short opportunity. So if we are going to continue this downward momentum that we've had, this obviously was news. So it's how far are we going to pull back on it? So if you measure this move with a fib, we're coming back up to a 38 retracement. So it's somewhere in the 24.72 area. If we're going to continue on a trend, would be sort of where I'd look for a bounce play. We're getting close to that area now. As I said, this US dollar can't rally too hard, too fast, because the yen, the Japanese will intervene and stop it. So it's difficult for the market to buy a lot of US at the minute, because it will be at the detriment of the yen, and they are watching very closely as to what happens with that. So get the feeling we might see this kind of neutral weak US dollar. So good looking short opportunity there. US dollar yen, obviously, as we know, is extended on the 4 hour, and we just looked at that one. Would be a lovely 145 bounce. We are getting a little bit embedded up here. As we are with all yens, they're all the same, aren't they? So that's all we got on the RSIs, because the market hasn't really done much today. Up until that news, we literally have just done nothing all day. So there's nothing really to talk about this afternoon that wasn't covered this morning, which was very little, because there's nothing to talk about. Market is flat. We are waiting for something to happen. Seems like the NASDAQ was invented by John Wicks. Yeah. Yes. Dow testing the highs. S&P running up to high 2. So we are just testing the highs on the Dow. Watch this level for price action. We may well get the sellers stepping in here. Oh, we've popped it. Okay, so the sellers have just puked straight away there. Wow. Really strong Dow today. Let's have a look at where we're going on the Dow. DAX. So propulsion gap filled on the hourly. Almost impossible to pick a target on this. All that's happened on the way down is just nice choppy price action. So there's no obvious levels you would look at and go, we bounced off there a few times before we broke it. That's probably where we're aiming for. So ADR is likely where we're going to start to get exhausted if this high doesn't get rejected. So we look like we've got some sellers starting to come in now. Propulsion gap fill. So that isn't really an accumulation break at all. So propulsion gaps, when you look at propulsion gaps, the best propulsion gaps are the ones where you get an accumulation and then a break. Yeah, so that is a breakout. Very large amount of sell orders happening at once. And when we get back to those areas, they tend to get retested. Yeah, so big propulsion, retest, add. This one here is not an accumulation. It's kind of a V-shaped move, and then a couple of hours, and then a push down. We did not break any lows. That propulsion gap there did not break that low. Therefore, it's just a move within that range. Yeah. Whereas that one broke that low. So that's a good propulsion gap. That one there. Just about, but that's what I mean. Yeah, those two together, definitely a big propulsion gap, which broke that accumulation. So not a great gap, that, because it's part of really a flag if you look at it. So we are rejecting it at the minute, though. So your decision is, if you're long on the ORB today, that could well be it. The market is definitely selling the highs there. So we've got an outside bar formation. So that candle there, we've got new high and a new low outside bar, which is an indecision candle. So inside bars and outside bars are all indecision candles, which means the market doesn't know which way it wants to go. It's met a brick wall. So we need to see who wins out this one. So good opportunity to take profits on longs if you're in. Could well obviously rally straight off and carry on going, but does look like a good sell, obviously, at the minute. So up to you what you want to do with that one. I'm taking it. Whether I'm right or wrong, I have no idea, but I kind of need to just, the reason I've taken that off there is because I need to pay for the DAX this morning. DAX was a double-ended stop out today. That's minus 1R. I've just made 2R on that. That is now 1.5R, so it puts me up basically 0.5R on the day. With an S&P position open. Difficult day today. Pound fundamentally bullish, technically bearish. Makes no sense. You can't say the words fundamental and technically in the same sentence. So it depends what you look at with the pound, though, doesn't it? Which pound? They're all different. So if you look at the pound cross with the US dollar or the CAD, very bearish. If you look at the pound cross with the New Zealand, it's bullish. Pound cross with the Australian dollar is bullish. Pound crossed with the euro, bullish. Bearish, rather. So fundamentally, the pound should strengthen over the next couple of months. We have got a long way to go on interest rates, a long way to go. And inflation is not doing well. So I would be looking to buy the pound everywhere, ideally, which means selling the euro pound. And pound US dollar, looking for buys. Which I've just taken a buy. Okay, so something like that, target to the upside, you know. So if that is going to be a 50% pullback, we'll be looking for us to come and retest those highs. That propulsion gap, there you go, there's perfect accumulation break, propulsion gap. That would be kind of last chance saloon for those sellers that started that move there to add. So that would be a good target. That is also a good target, that propulsion gap there, because that is previous support, which is likely to turn resistance if we are going to do another leg down. But we don't know. So, you know, you can either target there, or go for the double top. Burke, this is sad, but Turkey is different. If I get like $1,000 for a month, this is crazy for me. Yeah, that's fine. It's basically, if you're talking about prop, yeah, if you if $1,000 is a lot of money for you, you don't need to go for 100 grand account. Yeah. The bigger the account, the more drawdown you have. And it's always better to have more drawdown because you've got more space, more room to move, but you've got time constraints. So when the thing with these funded accounts is when you are trading at a monetary amount, yeah, people concentrate on the money. Right? What you should concentrate on is the percentage. Yeah, always concentrate on the percentage gain, because the percentage gain is the same on every single account. Yeah. But a $3,000 profit on a 300K account is 1%. On a 5,000, it's $50. Yeah. That's a big difference. They're both 1%. So you need to look at what you need to make percentage-wise to pay the bills. For me, I need a good 5% a month to pay my bills. That's what I focus on. So if I can get a 5% gain on an account, that's me sorted for the month. Anything over a 5% gain is bunts. It's holidays. It's everything else. It's extra expenditure. So don't go for a 100 grand account if you only need to earn $1,000 a month. Go for a 50 grand account or a 20 grand account. Yeah. Because you don't need, a 10% gain on a $2,000 account, $20,000 account is $2,000 a month. You're only going to get 75% of that, but that's all you need. So you only need to spend $139. Just buy what is right for you as an individual, which is going to be different for everybody, obviously. None care. Can you talk about how markets tend to work, like the way to see the market? I've done a boot camp on it. It's 12 hours. I can't sum that up in a live room. Go and watch the boot camp. That's too broad of a question. That's like saying, can I explain how the sun works? Yes, but not without you getting a degree in particle physics. If that's indeed what you need to describe what the sun does, because I don't know. But anyway, Mumo Burke, it's possible on paper, but trading a funded account profitably can get very tough under certain conditions. Most people blow accounts within 30 days. Yeah, exactly. Aussie dollar CAD. What's to look at? So Aussie dollar CAD, obviously we've had this big drop. So the Aussie dollar had this massive rally, and then we put in an A-shaped recovery. We looked at the A-shaped recovery bounce, and that has failed. However, they are stalling out down here at the moment. This is going to need a profit take on it at some point. So all these propulsion gaps to the upside are targets. You can see I'm targeting here at the moment on this one. But I think probably a lot deeper than that. This is the, I mean, there's lots of news events in there, but this is the main driver that sent the Aussie back down the opposite direction last week or week before. So just looking for a pullback on this move, basically, at some point. And it looks like we've just had the hourly reversal alert on this. So this could well be the peak formation low. So this is the first proper reversal alert we've had on the hourly since back a couple of days ago, when it looked like we were starting a rally and then it collapsed again. The Canadian dollar obviously is going to be dependent on what happens with the US and what happens with oil to a certain extent. And we've got a rally on oil and a rally on the US at the moment. So this is obviously going to be under pressure. But this is going to need a pullback of some kind. So it's a long at the moment. Got a few positions on this. You can see the first entry was back there. That first entry was looking for a retracement bounce on that move. So we were looking for a pullback continuation. Didn't get it. So at some point, we'll be pulling back up into there. Don't know when, though. Doing the opening 5, 10, 15 on the Dow, but for some odd reason, no trade triggered after the first 5-minute candle closed. 10-minute and 15-minute did as per usual. First time crude oil isn't rude. Second time crude oil hasn't been rude for me, because I had a beautiful trade off of this last week as well. Took that all the way up to there. And in long now from there. So I shall be looking. So this, let's draw that. I'm going to draw this trend line. I don't do trend lines, but I'm going to draw one on. So the trend line junkies will all be either doing that or they will be doing that. So basically 125 ADR today. We're not going to get to 125 ADR today. I'd be very surprised. So that multi-day accumulation breakdown there would be my absolute perfect target on this. So when you look at the entry, which was there, stop is down there. That gives me just under 3R on that one. Got 4R on the previous trade that I got out of there. So 7R on oil in 2 trades with 100% strike rate. I'm very happy with that. But we've got to get there yet. But yeah, it's not being rude at the moment, is it? For a change. Let's make a change. Dow's just rallied out the highs. So we got outside bar, followed by an inside bar. And now we've just got an inside bar break to the upside. So it does look like it wants to continue its rally. So upside target really today is ADR. There's nothing else to look at. So we're running basically to these highs, this accumulation. There's just nothing there. So I would look at ADR really for second target today, and just for the point of it, exhaustion on it really, which isn't far away at all, is it? Look, 70 points. $125 is 5R. I think it's 5R. Yeah, 5R. NASDAQ's dropped out the lows. So, and the S&P has absolutely no clue. These markets are all over the place today. No confluence anywhere. There's nothing. It's just a mess, isn't it? One of those days today. It's been one of those days all day today. We've had a really quiet sideways market all through London. We've had one news event which sent it into a spiral. It's undoing all of that and has no direction. It's just like it hasn't got a clue. We're waiting for something to happen. I suspect we're waiting for that US dollar yen to hit that 145 level so the Japanese intervene and everybody goes, oh my God, what happened to the yen? But we'll see. Tune in tomorrow morning. Could be interesting. In terms of daily, in daily way, weekly way. What was the first part of your question? Can you talk about how markets tend to work, like the way to see the market in daily way, weekly way? I don't really know what you mean. It's no different to anything else. If you look at a daily chart, is no different to a 4-hour chart, an hourly chart, or a 15-minute chart. Everything is made up of price action. So looking at the CAD Swiss here, it's going sideways. Yeah. The market uses support and resistance exactly the same as it does on every single time frame. I don't really know what your question is. You're kind of asking, can I explain how to trade? No. I don't quite know what the question is. I don't understand what you want to know. But go and watch the Bootcamp. I think is the, if you want to know kind of how the market works, but I can only explain what I can explain. There's not really, price action is king, you know, like it's talking about outside bars, indecision bars. It's just reading. You just need to learn to read what the market is doing and use that information to try and establish the next direction based on historical fact. That's literally trading. So a market reversal alert basically is a formation where you get a reversal. And after a reversal, if market structure is going to continue in the direction of the reversal, you'll get a market structure movement like that, which is just price action pullbacks. So how the market is structured in terms of daily and week, exactly the same. Nothing's different. Doesn't matter what time. Basically, all a candlestick is a view of price movement over a period of time. And the market's a fractal. So what happens on the 1 minute chart happens on the daily chart and the weekly chart. Yeah, there's an M pattern reversal on the weekly. Yeah, there's an M pattern reversal on the 1 hour. It's all the same, except everything moves slower on the daily. Unless I'm misunderstanding the question. It's the same thing. Doesn't matter what time frame you trade. The lower the time frame, the more choppy. So the more fake outs you're going to get. So everyone goes, oh, look at that beautiful stop run W pattern reversal that failed. Yeah, that can happen on the daily chart too. Oh, look at that lovely W pattern reversal that turned into a double top and failed. This is the daily chart. That was, I don't know what that was I was looking at. Was it the 15-minute or the hourly? All the same stuff. You got it. You do understand, I think. Yeah. There's nothing different to trading the daily charts or the hourly, except when you take a trade on the daily chart, right? So if you take that reversal alert there on the daily, that's your entry long. The difference between trading the daily chart, the only difference between trading the daily chart and trading the hourly chart is for you to put a stop loss under that low and get a risk reward of 1.5 plus is going to take somewhere in the region of 3 to 12 weeks or some, I don't know how long it's going to take. Many, many, many days, right? If you take the same thing on an hourly time frame like that reversal alert, yeah, in 24 hours it could do that. In 48 hours it can do that. So if you had a stop there and an entry there and you wanted to hit 1.5 R, you could hit it the next day. If you're trading the daily chart, you'll hit it the next week or month. If you're trading the 1 minute chart, you'll hit it in an hour. All that is different on time frames is how long things take to play out. That 4 hour W pattern reversal there, that reversal alert, when you entered that one there, took 1-2 weeks to get to the double top. You find one on the 5 minute chart. Just trying to find a decent thing on the 5 minute chart. So that M pattern reversal there took 3 hours on the 5 minute. That's literally it. The market's a fractal. The way that price is painted, price action unfolds on all time frames is exactly the same, except the higher the time frame you go, the more reliable your signals become, and the longer things take to play out, the less drawdown you have, the more time you have to think about everything. Everybody wants to trade the 5 minute chart because I can take a market reversal alert and be in and out of a trade within half an hour. But you are trading algorithmic chop, which means absolutely nothing. And the signals that you'll get down here will be incredibly difficult usually to trade. Your entry on that was there. Unlucky. It's just not possible to take it, is it, in that case? But on higher time frames, you won't find, you know, a big move like that on a reversal alert like that and a retest like that forming a W. You've got like the entire day to have a think about that. Which is why the vast majority of profitable traders trade the 1 hour time frame and above, because this smooths out all the crap that happens on lower time frames. Lower time frames is pure random momentum. So if you want to build a strategy on a time frame lower than the hourly chart, you flip a coin. It's exactly the same thing. But if you flip a coin at a level of previous support and resistance, you've got a higher probability of something happening because buyers and sellers add orders at those levels. The reason this is happening here on the Aussie US is not random. The market moved down, made a low, put in a bullish engulfing. Yeah, so the buyers bought that level and the sellers couldn't beat them back. They made a new high and then it pulled back. Yeah, they tried to push down lower and the buyers bought it again and made another new high. You got a double bottom. Next time we hit that level, the buyers bought it again. Yeah, the reason this is stopping here is not any other reason than this is where the banks and institutions are buying the Aussie dollar, US dollar, right? People will stop trying to sell it because they know that they can't get through it. Every time they've tried to sell this, they've lost. So they'll stop and they'll start to buy it. And as soon as they start to buy it, the buyers will see buyers coming in and more buyers will enter the market and it will rally. That happens on every time frame at support and resistance levels. Yeah. This sell here didn't happen by random chance. It happened because the banks sold there. The buyers tried to rally. The banks sold again. The buyers tried to rally. The banks sold again. Yeah, that happened because the banks are selling that level, that price point on the daily chart. But the lower you go, the more of it becomes algorithmic and the less reliable it becomes. So always focus on higher time frames. And again, going back to prop firms, they know this. They know that everybody wants to try and make a quick buck. So everybody's trading the time frames where no system or strategy works. If you try and trade the 4-hour time frames, you'll have a much better success rate. But you've got to pass your evaluation in 30 days. So when you get into a 4-hour position that takes 2 weeks to unfold for one trade that makes you 2R, you've got to be pretty accurate, haven't you? Yeah. They know this, it's not all the rules are put into place by prop firms because they know how people that know how to trade make money. They don't trade 5-minute crap. Everything you're doing on the ORB EA works, but it is complete random movement. Yeah, the reason we use the ORB strategy is because we don't know which way the market's going. We are hoping that one of the orders gets triggered and manages to get a rally. Hoping. That's it. That's what the rest of the market is also doing at the open. That's why the opening range breakout works, because when the market does get a rally, people start to buy it and it becomes a self-fulfilling prophecy. Yeah. But there's no reasoning apart from momentum. People buy momentum on low time frames, but it's not something that is you can consistently do. You couldn't sit on a 5-minute chart and do this all day long because it's totally random. You can do it at periods of time. It only works. The ORB strategy only works at the open. You can't use the ORB strategy at 5 p.m. UK time. It doesn't work. It works at the open only. So there are strategies like that at the time that work on the lower time frames, but everything else on the lower time frames is random. That makes sense? Hopefully it makes sense. But that's the best way I can describe it. What's the difference between trading S&P cash and futures? Just price. Price action is the same. It's just the actual price you'll be quoted from the futures market will be different to the CFD price. Other than that, there's no difference. And you are you're not restricted to lot sizing on if you're trading S&P futures. You will probably be restricted to lot size. You have to throw in a Lambo mentality out the window. Unfortunately, you have the Mamba FX clouding people's judgment. He's at it again. 500k in 30 minutes with 10 trades. I love it. I haven't looked at his channel for ages. I wouldn't want to meet him in the dark alleyway, would you? There you go. 500k in 10 trades. Oh, and look who else is back on the channel. Good old Greg Secker. Wearing his eye makeup. Love him. So let's see what time frame he trades. Nothing. It's not about trading, is it? Literally, it's all about selling you the lifestyle that you will never get if you listen to anything this guy says, because he can't trade, can he? If he could trade, you know, it's just going through P&Ls, going through signals. He runs a signal service. Look, he's selling signals. Well done, you've identified an uptrend. Hey, let's draw some lines on the chart. Five-minute chart. Just don't believe anything any of those people tell you. It is not true. Brian, that's your fault. I have the desire to invest in you and come back in 10 years. Free money. We've hit extreme greed, have we? Yeah, no, we were at extreme greed already. It's getting, we've been flicking between here and here for the last 2 or 3 days now. As soon as Japan intervene, that needle will go all the way down here and the market will poop its pants. But for now, yeah, we are being really greedy. We've just had the natural gas come out, so we've probably just had some oil spike as well. Yeah. So we just had the natural gas. Gas and oil are very intertwined with the news. Don't tend to pay much attention to the oil, gas news, but so I think probably tomorrow will be where I will. In fact, what I'm going to do, if you're in this trade with me from yesterday, I'm going to move to break even on it today because we've made a new high now and we've broken that area. So this is what I was looking to break to kind of secure the fact that this is the new peak formation low. So this reversal alert here and retest is the low. Where we're going to go to is obviously the question mark now. So going to protect it, break even, which is basically ADR today. So it's going to need an ADR hit to the downside to stop us out, which is a long way. So I'm going to protect that and just hope tomorrow we can get up to that kind of 125 ADR level. So coming up into these highs, basically into these propulsion gaps. And see how we get on at these trend lines, because the trend line junkies will be selling it. And when I say trend line junkies, I mean institutional players and large players also will be watching this. The technical analysts will be trading at those levels. So worth watching. I've just been saying about that guy on YouTube drawing lines on the chart. This is probably the first time you've ever seen me do this. I don't draw trend lines. But every now and again, you see something like that and you think, because I can see that so clearly, everybody can see that. Because everybody can see that, everybody will be waiting for that. And as soon as we get any kind of bearish price action at that level, everybody will be jumping on board. And the fact that everybody jumps on board will make it happen. But whether the banks and institutions are going to let it drop from there will be dependent on whether they have a short bias or a long bias at that point. So it doesn't matter what everybody does there. What matters is who's got the biggest bank balance that day at that point to drive the market up or down. We don't know what that's going to be. So, but you can bet your bottom dollar we will get some price action at that level. Probably tomorrow. Assuming we get there. We don't know if we're going to get there, do we? So S&P is totally stuck. NASDAQ's totally stuck. There's no movement. Dow's the only thing that's moving at the minute. So watch the Dow. This looks like a retracement to me. So we're inside bar on the Dow still. So we've got 2.5 minutes left on this candle, but big rejection. That was our inside bar break. Doesn't look like it's going to make any further progress at the moment. So we could get high-low pullback and rally, but I'm already flat. So you might want to get out of that if you're long. Might be a good sell back down into propulsion. But that is just a V-shaped recovery. So, this is just a V-shape and A-shape recoveries are nonsense. They're basically the market just making a quick buck. Yeah, there's no movement on that. That's where we opened. And likelihood is that's probably where we're going to close. It's just clearing the decks. Non-directional. Again, look at it on the daily chart. Think about what it's painting here. What did we paint yesterday? Yeah. What are we painting now? So if we're going to pull back from this high, this candle today will end up like that. Indecision. Indecision. Yeah. Market has no direction. That is if that does that. If that now pulls back and does that, we're going to end up with a bullish candle, which is a sign that we are looking to come up and test those highs. What will happen tomorrow? No idea. As I say, you can't use yesterday's candlesticks to give you any indication of what's going to happen today because it's got nothing to do with it. So how the market structure in turn? Oh yes, I'll answer that one. Best to trade at 1 hour plus all the time in hospital, no choices. Envy represents a new office. What? Nirav? He's got a new office, is he? I haven't seen a Nirav advert for a while. We haven't done an advert sweep for a while, have we? This guy as well. This guy comes up on mine all the time. His thing is, if you're not making $5,000 a month, you need to watch this video. If you're making more than $5,000 a month, skip this video. What's that mean? If you're not making more than $5,000 a month? He hasn't asked what my starting balance is. Should he be asking, am I making more than 5% a month on my $100,000 account? If so, yes. If I've got a £400 account, no, I'm not making $5,000 a month. Of course I'm not. Doesn't mean I'm not a successful trader, does it? Again, rubbish. Talking about pips, talking about money, it's nothing to do with anything. Anyway, I was looking to see if Nirav came up, but he didn't. I'm not going to get another advert now, so we'll have to give up on the Nirav hunt today. There's a lot of people in here going, who? I'm not sure, Neo. So it's not good to trade on the 5-minute time frame because it's the time frame I trade on. Up to you, Will. If you want to, let me ask you a question. Are you successful and consistently profitable on the 5-minute time frame? There are people out there that are. Yeah, there's traders out there that make money on the 5-minute time frame. They are extremely good risk managers. Yeah. So if you're going to trade on the 5-minute time frame, you will be using a stop loss. If you're not using a stop loss on the 5-minute time frame, you're dead in the water. So you'll be using a stop loss. So if you're getting into any trade on the 5-minute time frame, you are just very good at risk reward management, and that is fine. But the reason you're making money is because you're good at risk management. You're not good at necessarily trading anything because this is all random movement. So you are either very patient, which is what a good trader will be on the 5-minute time frame, i.e. you will be sitting here virtually all day waiting for it to hit that line. And right now you will be sitting on your hands looking at that going, I'm not going to take it because I'm going to wait for the buyers to be on my side before I get in. So you've got to sit through all of this all day, very patiently waiting for a line to get hit on your chart. Because if you're going to make money on the 5-minute time frame, the only real way to make anything more than 2R is to wait for support resistance. So, this movement you're seeing here has absolutely no reason to be happening. It's an accumulation where we started a move. I suppose you could take it for that reason, but much better to wait for it to hit an area like that. And you're going to be sitting there patiently all day waiting for that. And the only trade you're going to take today is going to stop you out. But then tomorrow, when you take that trade, you're going to get a 10R. But you've got to be able to have the balls to hold it as well. It's so hard to make money on the 5-minute time frame. And there's very few people. But if you can do it, because it's the same as anything else, isn't it? At the end of the day, you're looking to make money. If you can make money on the 5-minute time frame, trading gold only, do it. Doesn't matter how you make your money, does it? Have you experienced the kind of market conditions we're in before? Yeah. Well, we're not really in any market condition. Well, it depends what you mean by market condition. The market condition at the moment in FX basically is no, I haven't experienced those conditions because I've never been in. I've never traded through a fast, accelerated interest rate rising market as we are at the moment. Because the last time it happened, I was a kid. So no, I've never traded FX through this type of market. But it doesn't really matter. I mean, as long as you are sticking to the plan, just trade your plan. Basically, it doesn't matter what the market does. The only reason the market will matter is if you're using pips or something and you're not using ADR as a measurement. That's the only time you're going to get unstuck, really. Because ADR adapts to the market. It's starting to pull back. I'm going to let that S&P run, but I would really close the S&P out. If you're long on the S&P, up to you, but not really got any direction at the moment. We are still bullish S&P. Look, we're holding above the open. So, but Dow's coming down and the NASDAQ's trying to make new lows. I wouldn't hold up much hope for that either, to be honest, but it's not really going anywhere, is it? So. Also depends on your time on the screen. If you have a full-time job, you can't trade less than the 4-hour time frame. Exactly, yeah. This is the thing. If you, and that's all covered in the bootcamp on day 1 in here. Trying to sell me a laptop now. Look. Blimey. I thought this was multi-time frame analysis, this one. Is it not? Someone's bookmarked it, haven't they? Looking for a specific slide. It's not on that. Maybe it's... Oh, yeah, multi-time frame. It's on day 2, isn't it? There you go. So if you are a full-time worker, yeah, you can only check the charts realistically 2 or 3 times a day. And even then, you're going to have to do that at work. Yeah. So you can't really trade any time frame lower than the 4-hour. So you need to use a higher, if you're going to use higher time frame trend analysis, which is what this slide is about, you're going to be looking at the weekly trends and entering trades on the 4-hour time frame. So you're a swing trader, basically. If you work from home, you can basically keep a tab on the charts every hour. So you can use daily and hourly as your time frames. You could also use the 4-hour and M15. So this is H4 M15 mean reversion. So looking at the RSI on the 4-hour and entering on the 5 or the 15-minute time frame. If you're going to scout on M5, you've got to be sitting there watching the charts all day, waiting for those opportunities to scalp to come up. It's a full-time job, and it's the most difficult time frame to trade because it's algorithmic. So this is why what everybody wants to do is trade this time frame, because you see these idiots on YouTube going, hey, I just made 500 grand in 10 trades, trading the 5-minute chart by risking 5% of my account, and I was lucky enough to get a winning run of 10. Well done. Come back and tell me that you've done that consistently for the next 3 months. If you have, I'll snap your arm off and give you £1 million for your system. But you won't be able to because you can't, because the market isn't going to allow it. Yeah. So this is the time frame where people like Tom Hurgard, for example, will trade. Yeah. Very experienced trader, 20 years in the business, worked in brokerage, knows exactly what he's doing. Yeah. Most people can't trade this time frame because the only people that are showing you money made on that time frame are the gamblers, because they are literally flipping a coin by going, hey, when you get down to there, hit that button and risk tons of your account. There's people selling those compounding courses where they tell you to risk 5% per trade and double your account. That's brilliant. But you are going to blow that account risking 5% a trade, because at some point you're going to get a losing run of 10 trades and 50% of your account is going to disappear. At that point, you're going to need to double it up again to try and get that money back, and that's going to blow it. But until you've done it and you've been through the system hopping and you've tried all of those things and you've watched all the YouTube videos, you won't know. But they will all teach you to trade, usually down here somewhere. Yeah. Everything I teach is entries are on those time frames, but you are trading these. So I am trading the hourly time frame. When I'm trading H1M5 mean reversion, I am entering on a hourly market condition. The actual trade is taken on M5 with the market reverse alerts indicator, but I'm trading the hourly charts. I don't touch anything under there because it doesn't work. I've tried it for 15 years. Yeah, look at the support resistance. Look. This is why these black lines are on the chart. Yeah. But it's easy to get into this type of trading, and it's very, very, very successful. Support resistance, resistance, yeah. Resistance, resistance, resistance. That's how the market moves. It moves from support to resistance. Where's this going? Down to there, probably. This propulsion gap, because this propulsion gap is what broke that high. So when they get back down to there, they'll add to those orders, and then it will come back up into this area probably. So, you know, you can see it on the hourly chart very clearly. When you drop down to the 5-minute chart, yeah, it's just mess. It's just all mess. Nothing lines up properly. It just doesn't work on lower timeframes, because this is just millions and millions and millions of dollars worth of money being executed by banks at random. Yeah. That order there is one order by one or two institutions split into 1,000, $100,000 transactions to make that happen. Look at that on the EuroCAD, on the hourly, and it becomes obvious the banks have started a buy move there. On the 5-minute chart, you can't see that. Doesn't make any sense. Well, you've got to stick to the time frames that, first of all, most people can trade, and secondly, the ones that actually move at the speed you can actually trade, because we're not all Superman. Okay, covered all the questions there. That's good. Right, so Dow is pulling back from the highs at the moment. So again, 50% retracement potentially. You know, again, I keep talking about these, 5-minute time frames. But, as I said earlier, the same things happen. So market structure on the 5-minute is still there. So we've got a high, we've got a low, we've got a higher high. So if we are going to continue to rally today, the market will pull back and then it will make a higher high. So we go with a higher low and then a higher high. So market structure does work, except down here, it's more luck than judgment. Yeah. So there you go. Let's just have a quick look at what's going on with this yen. So dollar's pulling back at the moment. Still haven't hit that magic number. I say that's a magic number. It's just a big round number. It's just, we know the market reacts at big round numbers. Again, reason being, the banks don't go take it up to 145, 195. They'll say buy it up to 145 and then sell it. That's why big round numbers work. Quarters, halves and big round numbers are just levels that the banks call out for TPs and stop losses. Not stop losses, but TPs and ads and that sort of stuff. Yeah, so that's why big round numbers get bounces. Nothing scientific. It's just, it's easier to call 145 than 145.196. So that hasn't hit that level yet. The other yen's total indecision today on the pound yen. No New Zealand yen, euro yen. Swiss yen's trying, but again, we got up to there, sold it straight back off, back down. Nothing's able to get anywhere today. We are waiting for something. So we got the CPI figures coming out tomorrow morning for the yen. We've got Euro CPI flash estimates, but they will come out pretty much the same as the German. So we would expect those to be bullish, but we didn't get a very bullish reaction off of that today. So not likely there. So the only thing we got really tomorrow is the CAD GDP. We got PCE tomorrow for the US. That's hit and miss. So that one's fairly important, the CAD GDP figures. Apart from that, we're kind of out of news now. So I'm not quite sure what the market's kind of having a little bit of a rest today for, but it is. So we'll have to wait and see what happens tomorrow. So I will leave it there. I'll be back tomorrow morning, 7:50, same time, and 2:20 for the afternoon session. If there's anything you need, come in Telegram. I will be in there. But at the minute, we're just waiting for everything. So stuff is moving, but as I say, not really fast, is it? So boring at the moment. Just have to sit there and wait. All right, have a good day. Anything you need, come into Telegram. Otherwise, I will see you guys tomorrow. We'll trade the DAX tomorrow morning. Hopefully, we get a better move out of the DAX tomorrow morning. And obviously, we'll see how we get on tomorrow afternoon with the US indices. But mixed bag today. So we'll see what happens tomorrow. All right, have a good one. I will catch you guys tomorrow.